Okay, this lesson is on income reporting as it relates to your taxes. So when you go to do your taxes, you have to report all of your income. And then based on all of your income and your situation, whether you're married, have kids, all that stuff, determines how much taxes you actually pay. So the question is, why do you always take home less pay than your actual salary? So if I make $50,000 a year, I don't actually get to take home $50,000. Actually, it's far less than that. Okay, well, if you haven't already figured it out, a lot of your hard earned money goes to the government. There are federal taxes, state taxes, city taxes, Medicare, Social Security, insurance, and many, many more things that can come out of your paycheck. And before you know it, half your check is gone. We call that net pay. So we zoom in here. So net pay is we call it take home. Oops, let's reverse that. It's your take home salary. Okay. After, let's see, after taxes comes out. And then there's other things too. It's not just taxes, obviously. Social Security, insurance. Maybe you pay, to a retirement fund for or whatever reason. You have money coming out, but the net pay is what you make after everything's been taken out of your paycheck. It's what we call your take-home salary, or what actually comes on your paycheck. Now, the gross pay is pre-tax. Okay, so this is before anything has come out. So that's the difference really between net pay and gross pay. So usually we talk about when you talk about your actual pay, people normally talk about gross pay. So if I say I make $50,000 a year, I don't actually make $50,000 a year. I probably make on the order of $30,000 a year after all the taxes has been taken out. So, and that varies depending on what you have coming out of your paycheck. So a couple examples with dealing with net pay and gross pay. So here you have Barbara who started a new job and wants to verify her net pay has been computed correctly. So her gross pay per period is $269.75. Now it's not a lot. This might be a part-time job. She might be in high school or something like that. But Barbara is trying to figure this out. So her gross pay is $269. So now she has the following deductions that are going to come out of her paycheck. She has FICA, which is Social Security stuff, 6.2%. And Medicare is 1.45%. Federal withholding tax is 47.51. State withholding tax is 16.62. Retirement insurance contribution is $9. Disability insurance. So you can see sort of the pattern here. All these things that can come out of your paychecks. What we're going to see is, what does she actually take home? Okay, what does she actually get to take home? So what we need to do is figure out all this money. Now, a couple of them here are in percents. You have Social Security. That is in, and that's not a good color. Social Security is in a percent. And Medicare is in a percent. So we have to take care of those first. So let's look at first the Medicare, or sorry, Social Security. So 6.2%. So what we need to do is figure out what 6.2% is of 269.75. So, and it turns out that it is 1672. So we're going to write all these down here, and I'll just sort of list them. So 1642, and then you have Medicare tax, which is 1.45% of 269.75, and that is 391. Now all the other things here are already in dollars, so I don't need to worry about percents. I have all these here, 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 here. So let's look at, we'll add all these up. We got 47.51. We have 1662. We have $9. We have $2.56. And we have $12, and we have $6. So what we're going to do is add all that up and subtract it from her gross pay, which is $269.75. So when we subtract all of those, we get what her net pay is, which is $155.73. This is actually her take-home pay, so after everything comes out. So now it says, what percentage of Barbara's gross pay for this final pay period accounts for all of these deductions? So what we're going to do is figure out, so the difference is, if we subtract these two numbers, let's highlight here, if we subtract the 269.75 and the 155.73, we can figure out what the difference is. So I'm going to do it here, 269.75 minus 155.73. So that difference is 114.02. So we have 114.02, and we want to figure out what percent of her gross pay is that. So we're going to divide it into her gross pay, 269.75. And we should get a decimal, which will be a percent. So if we divide by 269.75, we get 42.3. So 42.3%. So what that means is 42% of her income actually is going to all of those things in example 1. From taxes to retirement to insurance to all kinds of stuff. So she actually loses 42%, and it's pretty typical for about anywhere between 30 and 40%, even upwards of 50% to come out of your paycheck. So keep that in mind when you're looking at your actual salary. Example 2. So we have Lorna's biweekly stub here. Assuming that Lorna's salary and deductions remain the same throughout the calendar year, how much will be taken out of her total annual gross salary for federal and state taxes? So what this is asking is, all of you, well, I don't know if all of you, but if you ever look at your pay stub, it looks very similar to this. So what you have is the dates of the pay stub here. Now this is bi-weekly pay stub, so it covers for 2 weeks, how much the amount is, and then it always has some sort of year-to-date value, how much you've made so far this year. And all of these are deductions from her current paycheck. And with all these amounts over here, all are the total for the entire year so far. And there's union dues and health insurance and retirement and year-to-date. So what we need to do, since we know that this is a bi-weekly amount, this is how much coming out bi-weekly, we can figure out what her total amount that will go to federal and state taxes. Because bi-weekly means 26 pays, we can just multiply this number by 26 and figure out how much federal taxes and how much state tax is actually going to come out. So if we take 1001.47 and times it by 26, or multiply it by 26, you get $26,000. So her federal, we'll call it just Fed, will equal $26,038.22. Then her state, and we'd have to take the 280.89, 280.89, and multiply that by 26. State taxes will be $7,303.14. So, and that's how you figure out how much you're going to end up paying total for your taxes. Just look at one of your pay stubs. If you make a salary, like this person probably does, the salary stays the same throughout the whole year. You can figure out how much you're going to pay in taxes, just by looking at one of your paychecks. Okay, next page. So, at the end of the year, you are going to have to report your income and your taxes and your expenses and everything to the government. Now, your employer has already reported how much they've paid you to the federal government. So, how they tell you that information is they give you a W-2. Now, if you've had a job this past year, then you have a W-2. Everyone who works has a W-2. So you've probably seen it. Basically, it shows what the company has reported to the federal government as to what you have made, all your deductions, what you've paid for, and all that stuff for the previous year. If you have more than one job, you'll have more than one W-2. So like when I was when I was coaching and stuff like that early on in my career, I had multiple W-2s from multiple different places. So it's your job when you do your taxes to make sure everything is right. If something needs to be adjusted, for example, if you realize that you are not having enough taxes taken out, or if you didn't, if you got married that year or had a baby that year, you're going to need to change your situation on your taxes, and that's what a W-4 is for. W-4 form is for. Okay, so a W-2 form is a report that shows all pay. Let's see here. Made a line there. Oops. Don't know how to get rid of. So it's a report that shows all pay and deductions for that job. Okay. So again, W-2 report that shows all pay and deductions for that job. A W-4 is a form you use if anything needs to be changed. Now it can't be changed. It gets changed for the next tax cycle, so the next year. You can't change like in the middle, like hey, unless something has happened to you, like you got married or you had a baby and stuff like that. So your W-4 it's almost like if you change if you're at work or something like that, and or if with the DMV, if you have to change your address, you need to fill out a form to mail to them to let them know that you've changed addresses. The W-4 is the same thing, but for your taxes. It's a form to make any changes in regards to taxes. So what that means is, for example, you want to make a change on your W-4 when you get married, because when you get married, you don't have to pay as much taxes. So if you leave yourself as single, you're going to be more money is going to be coming out of your paycheck because it thinks you're single and it thinks you're going to owe a lot of taxes because you're single. If you're married, you don't have to pay as much taxes, so not as much has to come out of your paycheck. So you can certainly leave your taxes as single. It doesn't, I mean, it doesn't matter, but you're going to want to make these changes when you have a baby and stuff like that, so that you don't get so much taxes taken out of your paycheck. More money goes into your account. Okay. You can also use W-4s to take out more money if you want to. If you know that you're going to owe at the end of the year, you might want your job to take out more money in taxes than it already is, and that happens too. So this is an example of a W-2 here on the right. We can figure out how much taxes she paid during the year just by simply looking at a few boxes. So Joanne received a W-2 form from her employer. It says how much did Joanne pay in taxes during the year. Now we're going to look at all taxes. So what we need to do is, here you have federal tax, okay? You have Social Security tax. You also, down here at the bottom, have state income tax, and you have local income tax. So that might be a city or a town or a county that collects taxes as well. So what we need to do is we need to add up all those numbers. If we add up all the taxes, all four of those are taxes, including Social Security tax, we have taxes of $27,021.20 in taxes. A lot of taxes. Okay. What percent of Joanne's gross income did she actually take home? So what we want to do is look at the wages, and then so we need to subtract the taxes from her wages. So since she made $76,350, if we subtract how much came out in taxes, she actually only took home $49,000. So 49,000, let's see, 328.8. So that, I mean, look at that. I mean, she says, you know, oh, how much do you make? Oh, I make $76,000. But really, that, you know, this is the amount that she actually makes. This is we call it take-home pay. So what we need to do is figure out what percent of this is of her total salary. So we can divide that into her gross salary, which is $76,350, to figure out the percent that she actually takes home. So if we take if we take that and divide it by, divided by 76,350, we get a percent that it looks like she actually only takes home 64.6% of her actual income. Okay. Again, pretty typical. Between 30 and 40%, you know, is taken out of your check, and that's almost 36% that's taken out. So pretty typical to have that amount of money taken out. So go ahead and read example 4, and I want you to see if you can figure out example 4 all by yourself. Go ahead and pause the video, try to do the problem, and check back for the answer. So I wanted you to look at this W-2 and see if you can figure out the answer to this question on your own. I mean, I want you to be able to look at something and see if you can actually figure out just using some problem solving skills here. So what we're seeing here in this situation is there's actually a difference from her wages to her actual pay. So this is her actual pay right here. So why is there almost it's about a $13,000 difference? Why is there a difference between what is her wages and then what is her Social Security wages? So Social Security wages will take on anything you've actually paid when calculating Social Security. The actual wages can verify, and if you notice, the difference between these right here is the same as if you added these numbers right here. So what happens is some people put money away for retirement. And when you put money away from retirement, one of the options that you have is what is called pre-tax. So what that means is I can put away $100 a paycheck, and that money goes into a retirement account without being taxed on it. Now, you will have to pay taxes on it once you collect it. When you go choose to retire and you choose to collect all your money, you'll be taxed on it then. But when it goes into the retirement fund, it's not taxed. It's what we call pre-tax. So it actually is deducted from their wages because they actually didn't use the money. Like the money didn't actually go in their paycheck for them to use and into their bank account. It doesn't count against them when they're doing their taxes, which is why this number right here is smaller, because they had a little over $13,000 go into retirement funds. They didn't actually get that money, so therefore they're not taxed on it, and it doesn't count for them for the taxes. So that is why there is a difference here. Okay, Social Security will take in all money made to calculate your Social Security tax, but when they calculate your actual federal income tax, this number right here, these two here, was not actually income. Okay, and so you're not taxed on it. And that's that whole point. And that's what brings me to tax deferred contributions. So tax deferred contributions are retirement. These are retirement funds that you can retirement funds that you can contribute to. Writing too big here. That you can contribute to that are not taxed until you take them out. Till you receive them at retirement. Now, why would why would it matter whether you pay taxes on them later as opposed to now? Well, the advantage of doing it pre-tax is you don't actually have to put away as much money. It means that you can put more money away, especially early on. Early on in your career, you might not be making a lot of money. So to have them tax deferred, you actually can put away more money when you might not have as much money than because it's not taxed. So it's more money going into your retirement fund. So people like that early on, they can put actually more money into the retirement funds without being taxed. Now you get taxed on it later, which is a big chunk, but by then you're not working anymore and it's all sort of extra money anyways. It makes it easier sometimes to do that. So the last thing we're going to talk about here is the 1099 form. So we talked about W-2s, we talked about W-4s, and then now we need to talk about your 1099. Now this you are probably not aware of, and you probably won't be aware of for a little while, but 1099 forms are used for any other income other than wages. So your income does not always come from your job. People get income from, maybe they have a rental house that they get income from. Maybe they have stocks in the stock market they get income from. Maybe from savings accounts that they get income from. Maybe they won the lottery. So there are a ton of ways that you can get income that's not from your work. And those are all reported on what is called a 1099. Now, on a 1099, it's not taxed yet, so you do actually have to claim it as income. So if I win a $650 million lottery, hey, I'm going to get a 1099 form from the lottery system so that they make sure that I pay income tax on that income. So a 1099 form is used to report, extra income not related to work. For example, I get a 1099 form every year. We get 1099 forms for college tuition that we pay. We get 1099 forms for interest we've made on our savings accounts and retirement accounts. So that's why we get a 1099 form, and it's income that does have to be reported as well. So that's income reporting, all income reporting, and dealing with doing your taxes. So you can do the rest of the questions here. The answers are all the way at the bottom on the last page, so you can check your work. What you have to do for the e-learning assignment is to complete this practice and submit it into Canvas. Okay, it does not count for anything, but it does count for your e-learning assignment, which is reported to the school administration purposes so as we can keep our e-learning days. So you're supposed to do it. If you don't do it, it gets reported to administration. And if you don't do enough of your e-learning assignments, you can serve discipline issues. So we want to make sure we do it, not just for the practice, for your outcome quiz next class, but for, because you're supposed to do it. You have an outcome quiz next class that will include all of this stuff on it. So it's important that you do it to make sure. I don't care if you necessarily know how to do everything on here, but you should at least try to do some of it. So thanks.